Have you ever considered buying diamonds? Not as jewelry, but as an investment in an asset? The question is relevant to anyone who wants to protect the value of their assets over time. The most important challenges and risks in this context are high inflation, steeper taxes on assets, and major crises and upheavals. Many of us today are concerned about the tremendous expansion of money supply by the central banks of Europe and the US, because this has the potential to create inflation in the future. One way of protection against inflation are investments in real property. Real estate, for example, offers classic inflation protection. However, as the collapse of the US, the Irish and the Spanish real estate markets in the years after 2007 showed, there is no guarantee that real estate prices will always remain stable. The value of real estate is not always more stable than stocks or bonds. On a global level, gold is considered a universal asset because gold is scarce. This is why it's used as a safe haven in times of crisis. When times or markets become unstable, gold gets more expensive. However, the price of gold usually goes down as soon as fears of crisis dissipate. A clear alternative to gold are diamonds. As jewelry, diamonds have been very popular for the last 3,000 years, but they are also an asset class for investors. Cut diamonds of high quality are much more scarce than gold, and they are much more valuable when compared by weight. For this reason, diamonds are also viewed as a safe haven in uncertain times. A look at the past reveals, in the last 30 years, the value of diamonds appreciated, always a little bit, nearly without interruption. Between 1983 and 2013, the average rate of increase, for example, for 3-carat diamonds, was on average 4% per year. In comparison, the significantly more volatile gold price during the same period also increased by 3.9%. The supply of diamonds is limited, while demand remains high. For this reason, experts believe that the prices of cut diamonds will tend to rise in the coming years, but in any case, they will not decline to any major extent. Value appreciation over many years, that sounds good. But if you're considering buying diamonds to protect your wealth, you should bear the following in mind. First, diamonds are easily bought, ideally from well-known and established dealers interested in protecting their reputation. But the diamond market is not very liquid. So if you want to sell a diamond, you need a bit of patience. Second, decisive for quality and price are weight, clarity, cut, and color of the stone. The stones best suited as investments are those of excellent quality with a weight of 0.5 carat or more. Third, in the industry, the motto applies that a diamond is only as good as its accompanying certificate. This means that all the quality features mentioned must be validated by an expert opinion issued by a recognized grading authority. The diamonds inspected there are individually numbered by laser engraving. This makes it possible for investors, traders, and experts to check the features of certified stones at any time via the internet. It is precisely this feature that makes diamonds tradable internationally and over longer periods of time.